I've personally tested dozens of TradingView indicators, and to be honest, most of them simply don't deliver consistent results. But during my testing journey, I discovered a few hidden gems that very few traders even talk about. These tools are genuine game changers, and today I'm going to share one of them, along with my exact settings and how to combine it with another powerful confirmation indicator. Stay with me till the end because this setup can help you filter false signals, identify momentum shifts, and trade with far more precision. Step 1. Adding and configuring the Deviation Trend Profile indicator. Let's begin by setting up the Deviation Trend Profile indicator, the foundation of this strategy. This tool helps you identify potential turning points in price by combining moving average deviations with dynamic support and resistance levels. Here's how to add it. Open your TradingView chart. Click on Indicators at the top of the screen. In the search bar, type Deviation Trend Profile. Then select it from the results to add it to your chart. Once it's added, it's time to fine-tune the settings for better performance and clarity. Settings Adjustment. Open the settings by clicking the gear icon next to the indicator name. Under the Input tab, change SMA length from 50 to 60. This small adjustment smooths the trend slightly more, helping to filter out minor noise and false signals. Next, go to the Style tab. Here, you can adjust the colors, line thickness, or other visuals for better chart readability. Use colors that stand out clearly against your chart background. This makes signals easier to spot during live trading. Once done, click OK to save and apply the settings. You'll now see the indicator displayed with colored circles and dynamic lines. Red circles mark sell signals, potential points where price could start moving lower. Sky blue circles mark buy signals, potential points where price could start pushing higher. The red and sky blue plot lines represent dynamic support and resistance. They shift with market movement and act as key decision zones. Trading logic. When a sell signal, red circle, appears and the price closes below the plot line, it signals bearish confirmation, a potential short setup. When a buy signal, sky blue circle, appears and the price closes above the plot line, it signals bullish confirmation, a potential buy setup. The Deviation Trend Profile gives you a visual and systematic way to understand trend direction and potential reversal points, serving as the first layer of confirmation for all your trades. Step 2. Adding the Linear Regression Oscillator. Now that the Deviation Trend Profile is in place to identify directional bias, the next step is to add a confirmation tool, the Linear Regression Oscillator, or LRO. This indicator measures momentum relative to the market's linear regression line, helping you verify whether price is moving in line with the current trend or starting to lose strength. Here's how to add it. Go back to Indicators at the top of your TradingView window. In the search bar, type Linear Regression Oscillator, then select it from the list to add it to your chart. Once added, open its settings to fine-tune the parameters for smoother, more reliable signals. Adjust the inputs as follows. Under the Input tab, change length from 20 to 55. This adjustment smooths out short-term fluctuations and helps focus on more meaningful momentum shifts. Change upper threshold from 1.5 to 1.0. Change lower threshold from -1.5 to -1.0. These threshold levels make the oscillator more responsive while still filtering out excessive noise. Under the Style tab, you can customize the colors or line thickness to improve visibility, for example, using a strong contrast so that the zones stand out clearly. When finished, click OK to apply your changes. How to interpret it. The blue area of the oscillator indicates downward momentum, suggesting bearish pressure or potential continuation of a downtrend. The green area indicates upward momentum, signaling bullish energy or potential continuation of an uptrend. How it fits into the strategy. The Linear Regression Oscillator acts as a momentum confirmation tool. When your Deviation Trend Profile gives a signal, either buy or sell, you'll use the LRO to confirm that momentum supports that direction. If both indicators align, the setup is valid. If they disagree, it's best to wait. This combination of trend structure from the Deviation Trend Profile and momentum strength from the Linear Regression Oscillator creates a strong foundation for reliable, rule-based trade decisions. Step 3. Defining trade conditions. Now that both indicators, the Deviation Trend Profile and the Linear Regression Oscillator, are configured, it's time to put them together into a simple, rule-based trading system. The goal here is to only take trades when trend direction and momentum both point the same way. This alignment helps eliminate noise and ensures that every entry follows a logical structure rather than relying on guesswork. Sell setup. Conditions. Before entering a short trade, make sure all of the following are true. The Deviation Trend Profile gives a sell signal, marked by a red circle on your chart. This shows that price may be shifting into a bearish phase. The market price moves below the plot line, confirming that bearish pressure has taken control and that the price is trading under resistance. The Linear Regression Oscillator displays a blue plot area, signaling strong downward momentum in line with the sell signal. A bearish candle forms and closes below the plot line, serving as your final confirmation that sellers remain dominant. Once all conditions align, that's your green light to enter the trade. Entry. Place a sell order immediately after the bearish candle closes. Waiting for a candle close ensures the setup is fully confirmed and reduces the risk of reacting to temporary spikes or false moves. Stop loss. Position your stop loss just above the most recent swing high or above the nearest structure level. This keeps the stop outside normal volatility and prevents early exits from short-term retracements. Take profit. Set your target using a 1 to 1.5 risk to reward ratio. For every unit of risk, aim for 1.5 units of reward. For example, if your stop is 20 pips, your target should be 30 pips. Maintaining this ratio helps ensure long-term profitability, even if not every trade wins.
Buy setup. Conditions. The Deviation Trend Profile gives a buy signal, a sky blue circle. Market price moves above the plot line. The Linear Regression Oscillator shows a green plot area, or bullish momentum. A bullish candle confirms the move. Once all conditions align, enter a buy trade at candle close. Stop loss. Place below the most recent swing low. Take profit set at a 1 to 1.5 risk to reward ratio.
Step 5. Why this strategy works. This strategy works because it blends trend direction, momentum confirmation, and price action validation. The Deviation Trend Profile identifies potential reversals and filters noise. The Linear Regression Oscillator confirms whether momentum aligns with the direction of the trade. The final candle confirmation ensures entries are made only during strong directional moves. This layered approach reduces false entries and gives traders higher confidence in execution.
So to recap, use the Deviation Trend Profile to identify buy and sell signals relative to the plot line. Confirm with the Linear Regression Oscillator to ensure momentum agrees with the direction. Wait for a confirming candle before entering. Use a consistent 1 to 1.5 risk to reward ratio and position your stop loss wisely. As always, remember that no strategy guarantees profits. Success in trading depends on discipline, backtesting, and consistent risk management. Spend time testing this setup across different markets and timeframes and refine it according to your style. Thank you for watching, and may your next trade be your best one yet. Trade smart, trade safe.